Right?
Yep.
Welcome. You're listening to Mortgage Investing 101, the show where we discuss high-yield real estate mortgage-backed investment opportunities. I'm Edward Brown, your host, and I'm proud to introduce my co-host, Mark Hanf, president of Pacific Private Money, one of the fastest-growing private mortgage firms in North America. North America, not just Northern California, North America. And our goal is to provide information.
The good news is that no one can't disprove it.
Yeah.
Can't disprove it.
Okay, our goal on this show also is to provide information and to increase your awareness of these important alternative investment strategies where you can earn secured high yields using your savings or IRA accounts. We'll get into the IRA accounts in just a minute. Annual yields of 8% or more are not uncommon using these strategies we're going to be discussing in today's show. And if you like what you hear, please call Pacific Private Money at 415-883-2150 for more information, or go to pacificprivatemoney.com. You can also call our hotline 888-529-1134 and leave your name and your question, and we'll get back to you after the show. For fun, we're also going to have trivia contests where at commercial breaks, where the first 3 callers with the correct answer win a free 3-day, 2-night stay vacation. And the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Lighthouse is only requesting a $75 cleaning fee. Check them out at lighthouse4fun.com. Today's trivia theme is the word dog. So the answer will have something to do with the word dog.
Okay, dogma.
Okay, dogma. I should have had that one. Okay, now, first of all, I want to let the audience know that there was an article in the Chronicle, and it almost was practically featuring you the whole time.
It was featuring Pacific Private Money, and it had my name on there, which was great. And so, yes, indeed, welcome, everyone, to Mortgage Investing 101. If you're listening for the first time, we'll get into exactly what mortgage investing is. If you're listening because you're a fan of the show or a fan of Pacific Private Money, thank you, and we'll get into some exciting news coming up later in the broadcast. But meanwhile, yes, there was a Chronicle article that came out in the front page of the business section on Thursday, and it was featuring hard money. And so it was the result of an inquiry I made to Carolyn Said, who's a Chronicle business writer, earlier this summer, where she had done an article about real estate investing, and there was a realtor quoted in that article who made a kind of an offhand remark about hard money being sharky. And so I saw that, and that always kind of grinds me a little bit, because I think that's really an old view of hard money lenders. I think most of those sharky guys are out of business today. And so anyway, I wrote her a letter, and I said, well, we're a private money, hard money lender. I've been in business since the turn of the market, and that we're really the primary source of capital for real estate investors today, and that we're not viewed as sharky at all by our clients, and that if you're ever interested in writing an article, a more balanced article on private money and hard money lenders, look me up. And so she did actually a couple months ago, and I shared with her a number of clients, borrower clients, lender clients, and even some other hard money loan brokers that I know and respect in the industry. And I thought it wasn't a long article, but I thought it was, for the first time in many articles I've read about hard money, balanced and actually kind of represented what the industry is in a more fair and balanced light.
It definitely did.
And it's really, I've said this to a lot of people over the years, that, and I firmly believe it, it's the private money lending industry was the catalyst for a lot of the recovery that we finally saw in real estate. Now, real estate was obviously trending downward in 2006, 7, 8, 9, and then, after 2008, when we had the subprime meltdown, the banks, Lehman Brothers collapse, et cetera, the banks really pulled out of, the whole of the, well, at the time they called it the subprime lending market. Well, we're not going to make any subprime loans anymore. But, what that really effectively meant was that they were no longer making loans to real estate investors. Now, if you know anything about the economy, you know that real estate and the real estate industry and construction and sales of homes is a huge component of our economy. And so, and of the gross national product, or they don't call it that anymore, what do they call it? The gross domestic product, GDP.
Oh,
keep
yeah.
thinking I'm old enough to remember when they called the GDP the GNP.
Yeah.
So in any event, so the Bay Area economy has been helped dramatically, in my opinion, by the hard money and private money lending industry by providing leverage and capital, much needed capital, to those entrepreneurial minded real estate investors who were buying foreclosed homes, and a lot of them were trashed or you got to remember, what were people doing in 2004, 5, and 6? They were
buying...
refinancing. No, they were refinancing
okay.
homes that they were living in that hadn't been remodeled, some of them in decades, and they were getting ridiculous valuations by appraisers, and then they were getting bank loans pulling out nearly 100% of that equity.
Oh, yeah.
And so a lot of the foreclosed homes were people who were using their homes like a slot machine. And so much of the, because I tell you, I personally saw hundreds and hundreds of foreclosed homes that my borrower clients were purchasing. You'd walk in there, and these homes were built in, a lot of them built in the 40s and 50s, 60s, never been remodeled, completely trashed inside, had ridiculous valuations on
$1 million.
Yeah,
Everything's
on
$1 million.
Yeah, and had these huge mortgages on them, and they were suddenly, massively underwater and ended up in foreclosure. And yeah, it's a horrible story, and a lot of people got hurt, a lot of innocent people got hurt, but a lot of not so innocent people got hurt too.
Yep.
Those people who used their homes as a slot machine, borrowed from the banks, and then spent that money, and then walked away, ultimately losing their home. But I'll tell you, those homes, the condition of a lot of those homes were that they really weren't saleable, and even the banks wouldn't make loans on these for home buyers because of the condition. So really, it took the real estate, the rehabbers, the contractors, the flippers, the guys that know how to, improve a property. And I got to tell you, we've made over 600 loans, most of them to real estate investors since 2008 from Pacific Private Money. And most of those remodels, I should say many of the remodels loans that we made, we're talking nearly whole house remodels. In fact, some of them, they take the home inside down to the studs and do new wiring, new plumbing, new kitchen, new bath, new sheetrock, all that stuff.
Yeah,
and
the
so
banks just are not lending on that.
No, that's exactly right. And so what you have is these turnkey, beautiful, like new homes in established neighborhoods, and there are literally thousands of examples of that happening in the last 5 years. So one of the unintended consequences, and quite frankly, a silver lining in this whole, real estate correction and mortgage meltdown, is that homes that would never have been remodeled are now like new, and many neighborhoods have been redeveloped in ways that would never have happened in any other circumstance. So again, the private lending industry, I think, are kind of the unsung heroes of the real estate recovery, and those people who participated in private lending, really what they were after was the high yield you can get by investing in a secured loan. But the other thing is there was really a social and economic good that came from the use of capital that was provided by private individuals. And that's really what we're talking about here with Mortgage Investing 101. The goal of this show is to talk about how you, the private investor, you have an option, and it's known as an alternative investment because it's not something you buy over from your stockbroker or from your financial advisor. It's not readily traded stocks and bonds, but it is a vibrant market out there that you can participate in safely and securely and earn 8% or more on average, even up to 10% annual on your money, on your savings account, secured by, in our case, Bay Area real estate.
And let's just get right into that. What are the risks?
Well, the risks are that the borrower doesn't make the loan payments and you have to foreclose on the property. So let's talk about that for a moment. First off, we don't do 100% financing. We don't even do 80% financing, which the banks still do today.
Yeah,
we generally make purchase loans no higher than 70% of the purchase price to our borrower client, who again is normally someone who is in the business of real estate investing, buying, fixing, and flipping property. So we make a 70% of the purchase price loan. They're coming in either with their own capital, or a lot of them have a financial partner. A lot of them, are partnered up with people with their own capital who provide the equity slice of the transaction. So we feel very comfortable in today's market in the Bay Area loaning 70% of the purchase price. If something goes awry with the project and they stop making the payments and we have to foreclose, we're very comfortable that we can foreclose on behalf of our lenders and end up with property that's worth more than what we loaned on it.
And that borrower is going to lose his 30% down payment.
Well, that's
plus
exactly
whatever
right. That's
put into the project.
right. That's called skin in the game. And so one of the problems with why the real estate became a bubble and then exploded is that nobody had skin in the game.
Yeah, they just walked away. They said,
People were
sorry, it
buying
didn't work.
homes with their FICO scores and getting 100% financing. Well, you can't do that anymore. I mean, you could, but no one's doing it today. The banks aren't doing it, and certainly private lenders aren't doing it. We're not making 100% financing to anybody. It's a skin in the game market now, and so so the risks are that the borrower doesn't pay. The risks are if the property is uninsured, which we go to great lengths to make sure that's not the case. The risks, in my opinion, are quantifiable, meaning that you can get down and say, well, here are the things that can go wrong. Compare that to the stock market. I mean, it's like, who the heck knows what could happen where your Apple stock might go down, 10%, on some arcane bit of, news that nobody ever expected. Whereas in the real estate market, it's a market that moves up and down very slowly, very predictably, generally speaking, and it's highly unusual that you would invest in a 70% market value loan secured in first position and be faced with unexpected risks that would put your capital and principal at risk.
Yeah, but there's no manipulation in the stock market, is there?
And
no fraud.
Right.
Okay. Tell you what, Mark, we're going to cut to our first commercial break. I want to remind the listeners you're listening to Mortgage Investing 101 with Edward Brown and Mark Hanf. And Mark, how do people get a hold of you? We're going to repeat this a couple of times during the show.
We will, and also before I get into that, let's remind the folks too that our website, the which is at Mortgage Investing 101, that's mortgageinvesting101.com, you can find broadcasts of our previous shows. So if you tuned into this show late and you want to listen to a show from start to finish, all of our prior 12 shows are on our website. You don't need to listen to all 12 because there's a little bit of repetition, but we try not to do the same show, 2 or 3 weeks in a row. So if you listen, go to the website and listen to the last couple of shows, you'll get a really good idea of what it is we do with respect to mortgage investing and your opportunities. And then, of course, you can always contact us at Pacific Private Money for more information. And to do that, you dial 415-883-2150. And feel free to call over the weekend and leave a message. We will get back to you next week. That's 415-883-2150. Or, in addition to going to the radio show website, which is mortgageinvesting101.com, you can go to Pacific Private Money's website, which is pacificprivatemoney.com.
Okay, and again, one more thing before we cut to the break. Pacific Private Money is having a free party.
Yes, indeed, we
tell us about
are.
the free party.
Well, we're having a what we're calling our fund launch event. Even though we launched our fund earlier in 2013, we never actually had an official fund launch party, and we are doing that this coming Wednesday evening at the Piatti Restaurant in Mill Valley. We've rented the second floor, which is about 1,000 square feet. They say it'll hold 100 people, and it looks like we've got about that many RSVPs so far, although you know how it goes. People don't show up, stuff happens. So if you're interested at all in stopping by Piatti's at Wednesday evening, November 6th at 6 p.m., it's going to go from 6 to 8, and we're going to do a kind of a short version of our slide deck presentation. We also invited two folks from IRA Services, one of the leading self-directed IRA custodians in California. They're going to come do a short presentation on how you can easily set up a self-directed IRA with your IRA monies, so that you can invest in things like mortgage pool funds or trust deeds or even buy real estate.
Okay, and that's Wednesday, November 6th at Piatti in Mill Valley. You'll be able to meet both Mark and me.
And there'll be a lot of people with money there too. I'm really excited about that.
Yeah. Okay. Now we're gonna cut. In fact, when we get back from break, we're gonna get into some misnomers about self-directed
Yeah,
IRAs.
we'll talk about IRAs.
We'll talk about that.
Exactly.
Okay. Want the audience to listen in on that. All right. Here we go. Here's our first commercial break. Here's our first trivia question. And again, the theme is the word dog. Coney Island claims to be the home of what American food? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-529-1134. That's 888-529-1134 to answer this question. Coney Island claims to be the home of what American food? One more time, 888-529-1134. Make sure to include your name and your email address. Please speak slowly and spell out your email one letter at a time. And don't touch that dial because Mortgage Investing 101 with Edward Brown and Mark Hanf will be right back.
Good.
We're talk about IRAs.
Yeah. I thought maybe I'd start out by talking about the fact that a lot of people have retirement accounts that are just kind of sitting out there, not really being attended to. You know, like old 401ks that you might have from an old company, or even a so-called self-directed IRA with Schwab or Merrill. And what many people should consider doing is rolling that into a true self-directed IRA. You can still buy stock. I mean, you can still do all the things.
Exactly.
You just don't have a guy telling you, oh, you should buy our latest, Schwab mutual fund thingy.
Yeah.
It's like,
Well, Schwab used to be completely independent. Used
Right.
to be. And then now suddenly, they come up with their own stuff.
of course,
We'll let people know.
we've got our own ETFs. We've got our own this.
Yeah.
We've got our own that.
And we'll let people know, we don't get paid for IRA services for referring them.
Right.
We're
We're not lackeys.
Yeah, exactly. We're just do-gooders.
That's right.
Good doers.
Good doers. Doing good.
Doing good. That's our motto.
Helping you build a better future.
I've heard that somewhere before. Okay, ready? Here we go. Welcome back to Mortgage Investing 101. I'm Edward Brown, your host, along with Mark Hanf, president of Pacific Private Money, one of the fastest growing private mortgage investment firms, not only in North America, but Northern California.
In the world.
In the world. Here we go. Okay, when we cut to the first commercial break, we asked this trivia question. And again, the theme is the word dog. Coney Island claims to be the home of what American food?
The hot.
Hot dog. That is correct.
Making me hungry.
I know. The Coney Island dogs are very good. Also, if you ever have a palooka dog or something from Pookie dog from Kauai, those things are amazing. Okay, we told the audience that when we came back, we were going to talk a little bit about self-directed IRAs.
Right, exactly. So, a lot of people out there, it's studying the statistics of how many people have, 401ks and other types of accounts like that from previous jobs, former employers that, they're not really doing anything with. They're just kind of sitting out there, they're invested in whatever stocks or, mutual funds or whatever they had placed at the time. But, a lot of people are just kind of not doing much with those accounts. And really, most people should strongly consider taking that money and looking at a true self-directed IRA with one of the custodians that many of them are here in California. Our favorite happens to be IRA Services. And the reason I say true self-directed IRAs is I get a lot of phone calls from people who say, well, I have a self-directed IRA. Oh yeah? Who's it with? And they say, well, it's, and they'll give me the name. It'll be one of the major brokerage houses like Schwab or Merrill, not to pick on those guys. And that always kind of annoys me because if you have an account with Schwab or Merrill or one of the major brokerage houses, you do not have a self-directed IRA. And it really annoys me that they're allowed to tell you or name their product self-directed. Just because you can pick from their little bundle of stocks and ETFs and bonds and et cetera does not make it self-directed. That's just a basic brokerage account.
Well, it reminds me, when Henry Ford first came out with the car, he said you can have any color you want as long as it's black.
Right, that's exactly right. So you cannot have, and you do not have, a self-directed IRA if your account is not with a self-directed IRA custodian like IRA Services Trust Company based in San Carlos. And there are others too, which I could name, but I won't because I like IRA Services.
Yeah, and by the way, audience, we don't get paid from them
No, we don't.
for touting them. We just really like them.
They're a sponsor of one of our other sister radio show, but again, they're just the reason most of my clients who have true self-directed IRAs open accounts with IRA Services is because their fees are among the lowest in the industry, and they're probably
Truly self-directed.
right. And I think they're probably the fastest growing IRA custodian out there, and so they're non-bank, but they are regulated like a bank. And again, if you want a self-directed IRA, and what a self-directed IRA basically means is you can essentially invest in anything, rocks, jewels, antiques, gold, and then including alternative investments like real estate and real estate secured notes, trust deeds, mortgage pool funds like we sell at Pacific Private Money. You can't invest in those things through your so-called Schwab or Merrill self-directed account. So again, you need to be clear on what a self-directed IRA truly is and what it is not. And again, if it's with a brokerage house, it's not a self-directed IRA. They're trying to hoodwink the public by calling it that, and they shouldn't be allowed to. But I guess that's something we'll have to complain to my congressman about that. So in any event, mortgage-backed investments like trust deeds, like mortgage pool funds, are a great investment strategy for your IRA because of the high yields you get. And we all love tax-deferred investments, and so whether you have a pre-tax IRA like a traditional IRA, or you open up a Roth IRA where in theory all of your gains will never be taxed, those are great investment tools to use to apply your savings and retirement funds toward high yields investments like trust deeds or mortgage pool funds. So you really need to check that out. Now, for more information, again, we'll plug our mortgage pool event that's happening in Mill Valley on Wednesday, November 6th at 6 p.m. because there'll be two people there from IRA Services based in San Carlos. They will be there to do a short, maybe 20-minute presentation on their company and self-directed IRAs and all the various things that you can actually invest in with a true self-directed IRA.
And I don't know if you got this, but they sent me an email. I'm going to read it right here. This is from Agatha. So either Agatha or Michael.
They're both attending.
They're both attending. But they said here that they're going to offer to our clients, which I assume they mean our listeners also. Mm-hmm. So mention Mortgage Investing 101 or our sister show Best of Investing, that they're going to waive some fees. Like if you're transferring from Pensco or one of the other companies, you mentioned some kind of a registration code of BESO3. But here's the deal. Just call Agatha at IRA Services Trust Company. Ask what the special deal given to the Best of Investing or Mortgage Investing 101.
So they're going to waive some setup fees?
They're going to waive some, they're going to waive
which
some
are not
fees.
that big to begin with. Their fees are some of the most reasonable in the business. But, hey, a fee's a fee, right?
Yeah, exactly.
Hey,
$75 or $100 or
my
whatever.
fee any day.
Okay, and so call them at 800-248-8447. That's 800-248-8447. That's IRA Services Trust Company. Talk to Agatha or Michael. So I just thought I'd mention that because I thought that was kind of fun that they were offering that for clients.
You shouldn't be reading your email while you're doing the radio show.
Sorry, I just remembered that.
Good.
Yeah.
So you're listening to Mortgage Investing 101 with Mark Hoff and Edward Brown. If you want more information about what mortgage investing is and how you might participate, please give us a call at 415-883-2150. That's 415-883-2150. You can call now while you're on the road, dial it up on your cell phone, leave us a message, and we'll call you on Monday. Or you could always go to our website, which is pacificprivatemoney.com, and from there it will give you more information. But what exactly is mortgage
I was
investing?
just
And,
going to say, let's get into nuts
here,
and bolts
here
of
we're
this.
halfway into the show, and we haven't even, for new listeners, we haven't even talked about what the heck is mortgage investing. Well, mortgage investing is known by many names. And we actually came up with the reason we called our show Mortgage Investing 101 is because depending on what state you are, it's either secured by a mortgage or a deed of trust. So essentially, what we do at Pacific Private Money, we are a private money loan broker licensed by the Department of Real Estate in California to originate loans. And we originate, our primary business model is we originate loans to real estate investors. And in fact, most of the other companies like Pacific Private Money, those of us who call ourselves private money lenders or hard money lenders, the term is used interchangeably, most of us make loans that the banks don't make. So we're filling that niche. We're not competing with banks. We're basically making loans to real estate investors because the banks really since 2008 have not been making those
I mean,
loans.
effectively, you are a bank without being a, all the FDIC insured bank regulation type things, but because you're lending money to these investors, to the real estate investors, you're acting like the bank.
Well, and that's what, again we'll talk about the different names that it's called. Mortgage investing. It's called trust deed investing. It's called private lending. It's called you being the bank. That's it. That really is, and it is one of the best kept secrets still, even though it's more popular and more known and more exposed among people seeking high yields than ever before. It's still a very small fraction of investors are aware that there is this alternative strategy where you can safely and securely earn 8% or more on your money through investing directly in a note, which is called trust deed investing, or more passively through a fund, which are called mortgage pool funds. So a small percentage are aware of it, and even a smaller percentage are actually physically doing it. I know that at Pacific Private Money, I've probably been contacted in the last 3 years by over 500 or 600 people asking for more information, and yet I probably have about 200 people that have actually pulled the trigger and invested with us. So it's and I think a part of that is the old conundrum of it sounds too good to be true.
Yeah.
How on earth can you pay 8% when the banks are paying less than 1%? It's got to be risky. This is my life savings. There's no way I'm going to put it to risk like that. How do I know you guys aren't Bernie Madoff, et cetera, et cetera? There's a number of reasons why people decide it sounds too good to be true, but it really isn't. And in fact, my active investors are happy that most people are making me feel that way because they don't like the competition. Because quite frankly, there's a finite number of good quality real estate loans in the Bay Area. Pacific Private Money originates about 150 loans per year. We're going to probably originate 50 million in loans this year. That might sound like a lot, but in the grand scheme of things, there's billions and billions of dollars just here in the Bay Area that's sitting in cash or other liquid assets that's in need of a yield, that's in need of higher yields. And so what's been happening in the last couple of years, and particularly the last 12 months at our office, is I get more and more people calling, asking for information, and particularly those people who are interested in investing in a particular note or an individual note. The competition among people wanting to invest in individual notes is actually really high.
Which is the reason why you came up with the fund.
That's the reason why we decided it was time to launch our own mortgage pool fund. We actually started that process over a year ago. We spent 6 months designing it and putting it together. We finally launched it at the beginning of summer, and we just deposited our 20th investor check this past week. We've got a little over $2 million, so it's small but growing. And I would imagine after our fund launch event next Wednesday, we will probably have appointments for the next several weeks until the Christmas break for bringing in new investors. And I have no doubt in our ability to raise the 30 to 50 million that we've targeted this fund for, because of the fact that there are so many people out there looking for yield. And at Pacific Private Money, we have a long list of references, and we can show you some of the type of deals we fund on a regular basis.
Yeah, we'll get into in the next segment. We're going to talk about specific the deal of the week, figure out that sort of thing. But let's go into the fund for just a minute. If I'm I guess if I'm an investor, I am an investor in the fund.
You are.
I am. But for the average listener, let's say he says, okay, if I'm an investor in the fund, I'm looking at this fund, what is the current yield to the investor in this specific fund?
So our private placement memorandum, which is the document, the governing document that discusses the way the fund works, is targeting a yield of 8 to 9% to the shareholder. So when you're an investor in the Pacific Private Money Fund, you are a shareholder of the LLC.
Okay, but you said targeted. But what's the reality?
Well, I tell people that my goal is to provide 8.5% to the shareholders. Well, we just had our third quarter distribution checks go out last week, and they were at an annualized rate of 8.9%. So we're on target, and that's actually, I'm told, very good for a newish fund because oftentimes there's startup expenses and other fees that are borne by the fund, which oftentimes will bring the yield down in a new fund. Well, that's not happening in our fund because I and the broker, Pacific Private Money, is picking up most of the first year expenses because I want to thank and reward the charter members, the charter investors in our fund by providing a true yield and not watering it down by throwing in a whole bunch of startup expenses.
Okay.
So in other words, we've borne those costs.
Okay, fair enough. Okay, so 8.9% so far.
Mm-hmm.
Now, again, going back to, it sounds too good to be true. That sounds like you're a 90% loan to value type of fund. With if there's $2 million, like in other words, the assets in there maybe only $2.5 million worth of value because it's you have $2 million of loans.
Well, and
what's the reality?
So the reality of the fund is, so right now the fund, we funded our 12th loan with that $2 million. The weighted average loan to value, which means the difference between the amount we loaned out and the value of the real estate that it's secured by, is 55%. So
that's pretty conservative.
Yes, that is. That's actually really good. Now, that number will fluctuate. It may rise over time because we do, our primary product, I would say most of the loans that are going out the door at Pacific Private Money right now are these 70% purchase loans. In other words, 70% of the purchase price. That's the most common loan that we make. It just so happened that there were some extremely favorable loans that came through our office, and I wanted to make sure the fund got the opportunity to invest in the best loans. And in fact, that's really my promise to the shareholders, is that the fund will always get first look and first right of refusal on any loans that come through our office, and we're funding anywhere from 10 to 15 loans per month. And like I said, we're probably going to fund about $50 million this year, and obviously we're only at $2 million on the fund to date, so we're still funding a lot of loans individually and not through the fund, but that will change as the fund grows.
Okay, so for more information, because we need to remind the listeners how to get a hold of you if they want. I mean, had they been in this fund the last few months, they would have gotten an annualized yield of 8.9% with a very conservative fund. How do people get a hold of you?
So call us at Pacific Private Money. We're at 415-883-2150. Again, 415-883-2150. Also, if you're just tuning in and you're wondering what the heck we're talking about, go to our website, which is mortgageinvesting101.com. Of course, all one word, mortgageinvesting101.com. And there are podcasts of the last 12 shows that we've done, the last 12 weeks. You can go back and listen to the last couple of shows where we go into a lot of detail about mortgage investing and the various nuances, and you can listen to that.
Excellent. Okay, we're going to cut to our second commercial break, and when we come back, Mark is going to share with us deal of the week, because we want to get into specifics as to what kind of loans you're putting in the fund, and just in general what kind of loans you're doing. Okay, second commercial break. Second trivia question. Again, the theme is the word dog. What 1956 hit for Elvis Presley had the word dog in it? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort Their website is lighthouse4fun.com. Call 888-529-1134. That's 888-529-1134 to answer this question. What 1956 hit for Elvis Presley had the word dog in it? When we come back, Mark will sing it for us. Call 888
Not likely.
529-1134. You look like Elvis. Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time. Don't touch that dial because when Mortgage Investing 101 comes back with Edward Brown and Mark Hanf, Mark is going to share with us the deal of the week.
Skinny Elvis or the fat Elvis?
Whatever one you want. So this next segment's going to be a little shorter.
Wow, this will be a fast hour. Deal oder week.
I feel like I'm on Hee-Haw. Deal of the week.
Oh, okay.
Petticoat Junction.
What do I got here? Deal oder week.
Odor. Deal odor week. What we should do too is on the investment investing. It's just the three of us.
Yeah.
Let's hit home with it.
Yeah. Absolutely. That's my deal of the week. Let's see. We can talk about the art. Maybe what I'll do is I'll talk about the woman who was in the feature article, Coy.
Yeah.
When you read that, there's a picture of her, kind of a sideways picture, but
That's right. That's right. Let's do that. Okay, here we go. Oh, here we go. How much we got here?
oh, that's right. Because we'll be talking blind,
Yeah. 12 minutes.
running mute.
12 minutes, 5 seconds.
Nice.
Welcome back to Mortgage Investing 101. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money, one of the fastest growing private mortgage investment firms in Northern California.
Thank you very much.
When we cut to, I was going to say that, you stole my line. When we cut to the second commercial break, we asked this trivia question. Again, the theme is the word dog. What 1956 hit for Elvis Presley had the word dog in it?
You ain't nothing but a hound dog.
That was excellent. I told you, I was hoping you were going to sing it.
I can do a better Elvis than that, but it was just
That's okay, it's off
too
the
much on
cuff.
the fly.
Yeah. Thank you very much. Okay, Mark, we promised the audience we would talk about the deal of the week. Take it away.
Yes, well, if you have been listening since the beginning of the show, we did talk about the fact that there was a feature article on the front page of the Chronicle business section on Thursday, Halloween, that was an article about hard money, and it featured Pacific Private Money in there because I was actually the catalyst for that article being written, a more fair and balanced article about hard money, since most of the articles about hard money are, would allude to the fact that we're loan sharks.
Or barracudas.
Yeah, right, exactly. Like, well,
Some
like
other
the old
nasty
hard
fish.
money days from, 10, 20 years ago, or at least maybe the horror stories that people have heard, and not really the true, private money loan companies like Pacific Private Money, who are making
Well, you have
much
a-
needed loans to real estate investors.
You guys have a very good reputation. You don't bait and switch. You're very nice to your borrowers, which gets into the article.
The article featured one of our borrowers whose first name is Coy, and in fact, she came to us rather frustrated because she couldn't get any bank to lend her money on this really beautifully remodeled home near Piedmont that she had. It's rental property, and in fact, it had an upstairs and a downstairs unit. Very, very nice home, and so she couldn't get her bank to lend her any money because she needed to finish a remodel on another property that she owned in Berkeley. And so, she was looking at maybe credit cards, but that was pretty expensive.
Sure.
They only give it to you in small chunks, 10, 15, maybe $20,000 if you're lucky. So she came to Pacific, and now she already had a first on this property, but as it turns out, it was a fairly low loan to value, that first, and she didn't want to pay it off with a hard money loan because the interest rate on that first was really good. I think it was like 3%. I mean, there's just
Wow.
really no one in their right mind would want to pay first at that kind of rate.
Sure.
But the challenge is nowadays, not all, even private lenders and hard money lenders, many of them are not making seconds. It's really even our industry has become one where we mostly do first position loans only. So, but she was referred to us, and we will do a second if there's lots and lots of equity, and we can keep the combined loan to value. Generally, with a second, I won't go as high as 70%. I like to keep the combined loan to value, say, below 60%. And the reason for that is, again, I have to go to my investors and try to sell the concept of them doing a second. And so many people got bitten who invested in seconds before the real estate meltdown, that many of them are very cautious now and tell me, quite frankly, Mark, I will not invest in the second under any circumstance, firsts only. So anyway,
which is a little ridiculous, only because there are times when you have a very small first,
yes,
and the combined loan to value, like you said, if it's 50%,
right,
it doesn't really matter.
So in Coy's case, she just needed a couple $100,000, and so when we actually had an appraisal done on her home, and as it turned out, that $200,000 in addition to her first was below 50% combined loan to value. So I think the home came in, I'm gonna guess around, I think it was like $1.6 million, and the first on her home was just under $500,000. So we were below 50% combined loan to value. And yes, we did charge her 12% because, again, I had to motivate an investor to do a second, and so that 12% rate was very motivating. Now, the investor didn't get the whole 12%. That investor got 11%. Pacific services that loan, and so we captured 1% for servicing that, and we charged points. Now, the article said we charged 4. We actually charged 3, but please quit on. And the nice part about it was Coy was very kind to to basically share how she felt about it. She didn't feel like it was loan sharking. I mean, did she enjoy paying 4 points for $200,000? Well, nobody enjoys it, but it's a means to an end. I mean, she got the capital she needed. It didn't take long. It was a couple of weeks. She got the money. She's busy at work right now remodeling that Berkeley property, which she'll put on the market, she believes, right after the holidays. And so, again, it's a business tool. I mean, that's what, cash is a tool. And so if you need capital and you have equity in property that you own, preferably not owner occupied, because the regulations are very, very stiff when it comes to making loans nowadays on an owner occupied residence. But if you've got rental property or commercial property or other types of property that you're not occupying and it has equity, oftentimes you can tap that equity with a private lender. So again, if you're interested, give us a call, Pacific Private Money at 415-883-2150 for more information about how you can borrow against the equity in property that you own for investment purposes, or if you want to know more about how you can get in on a well-secured second and make as much as 11% on your money. Now, you want to talk about sound too good to be true, but it's not. It really isn't. And again, people in the know have been doing this for years and years and years, and in fact, they're a little bit annoyed that articles like that come out. It's funny, the day that article came out on Thursday, I got nearly a dozen calls from people who wanted immediately to go onto our investor list. In fact, I sent out a tremendous amount of information about our mortgage pool fund to those prospective clients. So it was a good thing.
Well, the interesting thing is with the meltdown and the shutdown of the government, the economy, et cetera, banks not lending, now seems to actually be a really good time to invest, very similar to the early 90s with the S&L crisis. I won't say it's exactly shooting fish in a barrel, but in some cases, when you make a loan, not that you're a loan-to-own guy or that you wish ill will upon anybody, but in some cases, you actually wouldn't mind too much if they stopped making the payments.
Well, I have some clients, and these are clients who like to invest in individual notes versus the mortgage pool fund. They're very active real estate investors. In fact, I know one guy in particular, and I won't name him because I think that would embarrass him, but his entire real estate portfolio, he has about half a dozen properties, including a really nice commercial property. All of them he acquired as a result of having to foreclose on a hard money loan that he personally funded. Now, he didn't make the loan thinking that that was going to happen, but it happened. And in every case, bar none, he's thrilled. He can't believe that he's got this great portfolio of real estate that he acquired over a 20-year investment period. Now, not every loan he made he had to foreclose on, but
Sure.
it just happened to be over, dozens and dozens of loans.
So-
He ended
so
up
the-
foreclosing on this handful of loans.
Okay, so the good news is that when the borrower pays, he gets his 9, 10, 11% interest. The bad news, which turns out to be good news, is that
Most of the time.
most of the time when the borrower doesn't pay, he ends up with the property and ended up extra equity.
Well, and nowadays, just to be clear, of the 600 plus loans that we have originated at Pacific Private Money, less than 1% have actually gone to foreclosure. Now we've had to file notice of default on about a dozen guys to compel them to pay because they were either lazy or just didn't budget their money properly. But those all turned out to be fine and did not go to foreclosure. But there were actually 6 or 7 properties that have gone to foreclosure are now owned by the lender, and in no case has a lender
Lost money.
principal or lost
Well,
money.
well, here's the interesting thing is, okay, so if a borrower doesn't pay, then there's the inconvenience of the fact that you're not getting the monthly income. However, you get to charge late fee and default interest. To explain what the default interest is, we have a couple of minutes left.
So when we write the promissory note that the borrower signs, there's several things in that note that are a little bit different than a bank loan. First of all, we only give a 10-day grace period for the note payment. So if it's paid after the 10th, there is a 10% late charge on bank
Oh,
loans.
it's usually 5%
Yeah,
for bank.
right. For bank, well, I think bank loans, it's 6% is the
5%,
max at
okay.
most, 5-6%. We charge 10% after 10 days. In addition to that, if you miss 2 payments and we decide that we want to get tough, or if our private lender says, look, I don't want to mess around, send this guy a letter, put him on notice, we're gonna execute the default interest rate if he doesn't pay up. Our typical note's default interest rate is 4 percentage points higher than the note rate. So if we have a note rate of 10% and the lender is getting paid 9% after servicing, that would then increase from a 10% note rate to a 14% note rate, of which 13 would go to the lender. And so that's not necessarily a bad thing. And there was a kind of a funny story. I did a loan secured by some real estate in the Bay Area where the guy never made a loan payment. It turns out the guy ended up going to jail for fraud on an unrelated transaction, unrelated to our loan.
Okay.
But he did a cash out loan to get some cash. He never made a loan payment. Well, after he missed the loan payment, we found out he was in jail. We initiated the default interest rate, and make a long story short, the property was sold by the people that took over for his finances, and my lender ended up getting 16%
Wow.
return for that 6-month period that he had that money outstanding. Now, he got a little nervous, I understand, but at the end of the day, he was pretty happy about it.
He would have been happy if he would have gotten the property back. Again,
Yes.
one more quick thing. How do people get a hold of you if they want this good interest rate fairly secure?
415-883-2150 is the number for Pacific Private Money based in Marin County. 415-883-2150, or go to pacificprivatemoney.com.
And don't forget, November 6th, Wednesday at Piatti in Mill Valley for 6 p.m. to 8 p.m. launch
Yes.
party. Okay, tune in next week too. Mortgage Investing 101. We're going to be giving away more free vacations for answering trivia questions and giving more valuable information about mortgage investing. Thanks for listening. I'm your host, Edward Brown. And on behalf of Mortgage Investing 101, so long. We'll catch you next week.
Good.
10 seconds.